Welcome back in the ongoing conversation about AI and crypto and whether they're in a bubble, the bubble's bursting, it already burst, are we in a downtrend, what does 2026 have in store for us? We're now hearing a lot of things about the AI space, about the jobs that are impacted by AI, about the data centers that are involved in AI, and more importantly, we're going to show videos from actually the new CES conference that is ongoing in Vegas, and how some of the tech YouTubers are kind of calling foul and saying that this whole AI craze may actually just be a load of BS. Meanwhile, we're also hearing that the Zcash developer team, all of them have quit and formed a new company after a clash with the board of Zcash. Guys, there is a lot to take in, a lot that's going on in the crypto markets at the beginning of 2026. And where are we in the cycle? That's what we're going to be discussing in today's video. We're going to break down AI. We're going to talk about some of the AI companies, some of the layers to the AI bubble conversation. And we're also going to talk about what's happening in crypto and kind of how this relates to where we are in the cycle. Because as you guys know, as we are now in 2026, I've been calling the top of the market since the middle of 2025. I was correct. We're now in 2026. We're downtrending. We're heading into a bear market. How long the bear market is, how deep the bear market is, we're going to have to wait and find out. But these are all signals that we're going to be going over today about where we need to invest our money to protect whatever we have so that when we do hit the bottom of the market, we are able to buy it. This is the Cryptoviser podcast. Sometimes we do deep dives into individual topics, and sometimes we talk about the macro environment like what we're doing today. So make sure you guys are subscribed to the channel. Give the video a free thumbs up. Remember, thumbs up are free. Crypto is not. Let's get into today's video. So to begin, we're going to start talking about AI. Now, meet Kevin, who is a well-known YouTuber in the finance world. He said CoreWeave, a $40 billion AI company, just filed an 8K, an SEC filing, that essentially they're solvent and can't pay their bills. Bankers are de facto pre-begging for an NVIDIA bailout. CoreWeave has just 4 months of cash left based on their last filings with the SEC. Not great. And, just a few months ago, we heard that Core Scientific, which is a Bitcoin mining company that pivoted to AI for the data centers, they voted down an acquisition deal so that CoreWeave was not able to actually buy Core Scientific. And now we're seeing that Core Scientific is amending their credit agreements to adjust financial covenants and liquidity. This is right from the beginning of January 2026. CoreWeave announced it entered into an amendment on their credit agreement with several banks. According to the press release, the amendment aligns the credit facility, meaning the ability for them like a credit line, with the timing of deliverables previously described by the company in their earnings call from the quarter ending in the end of September. The change includes a reduction of the minimum liquidity requirement to $100 million for monthly payments from March to April of this year. This adjustment comes as Investing Pro data shows that CoreWeave has a concerning current ratio of 0.49, indicating short-term obligations, meaning what they owe, exceed their liquid assets. Basically, the data from Investing Pro says that they owe more than they actually have in liquidity. That's exactly what Meet Kevin was talking about. And this could indicate kind of where many of these AI companies have been and are, right? Part of the reason they may have tried to acquire Core Scientific is for the cash flow and for their Bitcoin and for the facilities, so they can, basically collateralize their debt with the facilities that they would own. But now that that's gone, well, maybe the bubble is bursting, right? Because we've been talking about circular financing with these AI companies for quite a while, and the fact that these companies are not really making that much money. I just saw a stat the other day that there's 35 million ChatGPT users that pay $20 a month. I thought that was extremely high. Like, that's 10% of the United States. Anyway, the amendment also postpones the initial testing date of the debt service coverage ratio and delays the initial testing of the testing date of the contract realization ratio covenant. Additionally, the agreement now permits an unlimited number of equity cures for failure to meet debt service coverage ratio. Effectively, they have unlimited shares that they can issue to basically pay the debts that they owe. Yeah. Seems like CoreWeave is definitely in a little bit of a bind here. Let's look at the CoreWeave stock, CRWV on the stock market. And you can see over the last 6 months, it's been downtrending. It was at $160. Effectively, in the middle of the year when we called the top of the market, June, it was at $180 and it's down 57%. So kind of right in line with what MicroStrategy is. Significantly more downtrend than we've seen with some of the Bitcoin mining companies like Iron and Cypher Mining that have gone up towards the end of 2025. But very interesting. The other thing that I wanted to show you is this. And this is from the CES conference, from my understanding. You can see here that they have already showing blackjack dealer robots at CES. And they said along with, and then he had another tweet of somebody behind the scenes watching and making sure everything was running. But look how slow this robot deals. Like, do you guys really think that this is going to replace people anytime soon? I mean, maybe they've slowed it down so that people can actually see, but you know, a lot of these AI robots don't have the speed or the smoothness, I guess, of a human in interacting with their environments. So yeah, I mean, the whole AI conversation is still ongoing. You know, this user, dollar cost average on X, with 12,000 followers, said he's holding 40,000 shares of Cypher Mining, going to start selling covered calls soon. Cypher Army, how are we feeling? Well, I don't own Cypher, I don't think. But I mean, if we look at the 1 year chart on Cypher, I mean, this looks like we had the buy the rumor, sell the news event. And you can see every upward trend we have here comes slamming right back down to this kind of support level of around $14. Now, are we going to go above this? Possibly. But again, if the AI sector this is what they're releasing, these slow blackjack dealer robots, thinking like this is actually going to change anything or any casino is actually going to use this, they're not. And we also have the concerns about CoreWeave potentially not having any money. Now, this doesn't necessarily mean that it's going to, you know, the whole AI sector is going to blow up, right? Obviously, other companies may acquire this company, or they may get funding to keep the liquidity going. But at the end of the day, this shows that there's clearly cracks in these AI companies and in their business models. And are they able to actually, number one, make money, number two, offset their costs of development, and number three, get people to actually pay to use their products? That's a big question that we have to ask and answer. And having he said 40,000 shares. So let's just do the math on this. Let's see here. So 40,000 shares, and we multiply that by, let's just say $17. It's over $500,000 just in Cypher Mining, literally at all-time record highs. I mean, if you pull this back on the 5 year chart, you can clearly see. And this, I mean, just from a neutral analyst looking at this chart, I mean, this looks like a triple top there, right? I mean, anytime you see kind of multiple tops being formed and we can't kind of go above those levels, that means there's massive profit taking going on. The same thing is effectively going on in MicroStrategy, right? Everybody thought that the MSCI index, if they got delisted, this was going to be net bearish for MicroStrategy, and some of that was probably getting priced in, and so they weren't delisted from the MSCI index, and all of the bulls are saying, well, this is bullish, this is so bullish, and it's like, no, it's neutral, right? We were trending bearish if they were removed from the MSCI, but they weren't removed from the MSCI, so it's neutral. There is actually no change. And so if the trend was still down, the trend is still down. It just may not be an accelerated down move based on the fact that they were not actually removed from the MSCI index. But we're going to get back to MicroStrategy in just a little bit. But yeah, Cypher Mining, another AI play. Generally speaking, all of these Bitcoin mining companies that pivot to AI, I think that they've achieved the growth that they were, I guess, due. And I do think that we're going to continue to see downtrend, right? Especially if the overall market is having issues and AI companies are having issues, right? Because if these companies are signing deals with these AI data center companies and then they're not able to pay their bills, effectively, there's no deal, right? Anyway, talking about CES, this YouTuber posted this on on YouTube. Two short videos I'm going to show you guys, basically with his viewpoint of what CES is, and was it actually anything to be super excited about. I guess that's the easiest way to put it. And by the way, if you want to check out his YouTube channel, it's Hipyo Tech. I think he does mostly like keyboard videos, which you would think like there's a channel about keyboards. Yes, and he has quite a lot of subscribers. Anyway, let's listen to what he says in this first short video from his YouTube channel at CES 2026. And don't forget to give this video a free thumbs up. That way you never miss a new video. Let's get into it.
CES 2026 is one of the most depressing things I've ever been to. I'm here looking for cool, fun tech. You know what I get? AI and everything. I know it's ironic that I'm wearing these glasses. These glasses are stupid and I'm giving them a stupid little review. But can somebody just make a cool product and not put AI in the name or in the thing? Look at this. I'm at the Innovation Awards. There's supposed to be a bunch of innovation back here. You know what it is? Every random household good that you could possibly think of that they put AI in the name of. This is not innovation.
And so this is the same thing that you'll see online as well, right? You'll see all these AI products coming out for things that like, do people really need their garbage can to have AI in it or have any AI integration? I mean, a lot of this comes down to these executives saying, you know, let's jump on this AI bandwagon. And by the way, this is also an indicator. We're going to show you the other video in a second. This is another indicator of bubble in the market, because I'm not saying there's no technology in AI. Obviously, AI is revolutionary. A lot of these companies are doing really great things, but like the large language models that we have now are effectively, another level to Google searching, right? I mean, it's basically the same thing, but it's giving you more personalized answers and more specific things. But this is not really like, you know, if you ever watch the show The Jetsons, right, where they had a robot maid doing everything in the house. I mean, these robots can barely fold clothes, let alone do anything else. And they're already, you know, oh, well, let's make people's forks and knives AI. And it's like nobody wants that and nobody asks for that. And I don't know that anybody's going to pay to use that, right? So, but this is where the innovation is, right? They're all saying, oh, let's just say AI. And you see this across the board. I mean, every company is implementing some form of AI. And this brings us, and I'm going to show you the other video in a second, but that's going to bring us to this, right? That AI layoffs are looking more like corporate fiction that's masking the darker reality, according to Oxford Economics. And in this article, they basically talk about the fact that firms don't appear to be placing workers with AI on significant scale, suggesting that instead companies may be using the technology as a cover for routine headcount adjustments. And, that's pretty interesting in itself. Because we have seen over the last part of 2025, tens of thousands of layoffs at some of these tech firms, and they said, we're replacing with AI and all of this. And I think that some of it has to do with that. It's making things more efficient and making people's jobs more efficient so that you need potentially less people. But they could be using it as a mask. Like, everybody's talking about AI. This is our moment to lay people off and say that it's because we're utilizing AI. But everybody is talking about AI and everybody's using AI as an excuse. Oh, we need more money because we're going to implement AI. Oh, I'm seeing a lot of different companies that are talking about they're going to have the newest AI product. They're going to have the best AI product. And it's like, all the AI products that we see are just innovations of other AI products for the most part, right? There's no actual real innovation there. If you look at even ChatGPT, Google Gemini, XAI, Grok, these are all basically the same thing, just different versions of it or different layers and programming, but it's all basically the same thing. And this is very similar to what we see in crypto, right? They're all basically the same thing that are trying to achieve the same things that promise the world and say that they're going to do things better than Ethereum and Solana and Sui and Cardano and this and that. And meanwhile, none of them really can, and none of them are doing it. And the same thing is going on in AI. And so this is an indicator, in my view, that the bubble is starting to pop. And these tech reviewers, they're the ones who are really going to drive people to use and buy these products. And if they're not believing in it, they just think that there's really no innovation going on. I mean, basically, you could say the same thing about Apple, right? I mean, Apple has not really innovated for over a decade now, right? It's just a new iPhone with a new camera and a new screen. And wow, the battery is of 1 hour longer usage. And it's like, really? I mean, 2 years ago, 3 years ago, I think it was, they launched a yellow iPhone. That was their big thing for the whole year. Well, we have a new color. It's the yellow iPhone. And I was like, this is one of the largest companies in the world. And all they have done is release a new colored iPhone. No new technology, no innovations, just an iPhone. And they thought that that was innovation. Well, it wasn't. Let's listen to Hypotech's second conversation. This is at his when he was at the Lenovo keynote speech at the Sphere in Vegas. Let's listen in.
Okay, can I just rant for another second? I'm
Yes.
at the Lenovo Tech World keynote at the Las Vegas Sphere. I thought this thing was going to be incredibly cool. I thought, Tech World, wow, amazing announcements. You spent millions of dollars renting out the Sphere? That's going to be so, so cool. You know what it was? A bunch of tech oligarchs hitting each other off because guess what? They made investments in each other's AI data centers and everything's AI.
Now I'm going to pause right here. Number one, because there's music. Number two, to give you guys some context, right? Yeah, I mean, he said it right there. The AI data centers. The only people that really like these AI data centers are people who are invested in these AI data center companies and the AI data center companies. That's it, right? Most people in the US, we've been talking about this. Bills for electricity have been going through the roof. People's resources are being stripped by the building of these AI data centers in certain areas of the country, and people do not like it. But these executives, they're like, wow, this is amazing. Everybody's going to love this. Everyone, all of our users are going to love that we're investing in data centers. Like, okay, but how does that affect me? Like, how is that going to be good for me and for my viewers, right? That's really what the conversation sounds like here. Let's continue listening in.
Cool, neat, right? I'm wearing AI glasses. This is to review them. Just ignore that. But on top of that, they're like, we know what consumers want. We know what consumers want. This is the biggest thing ever. An AI pin? Haven't we done that before? What are you doing? What is going on here? What a waste of time. At least maybe Gwen Stefani's going to be here. But I have to sit through like another 40 minutes of this, please.
So he's saying that they basically came out with another AI pin, right? Something that you pin to yourself, and then you say, hey, AI, what is this? What is that? And it answers you after a delay, if it even answers you. Like, none of this stuff that they are creating, besides really the large language model usage, vibe coding, programs and applications, I just don't think that AI is advanced as many people think that it is, at least at the consumer level just yet. And I think that everybody's just saying AI to get more funding, to get people excited. But really, when you look at the technology, it hasn't really changed that much. And so this is where, the rubber meets the road. The good companies are going to succeed because they're going to overlook all of this. It's the same thing in investing, guys. The people who don't understand that we are in a 4-year cycle for Bitcoin, and they're saying, well, the Bitcoin cycle is done. It's over. It's no more. Cryptoviser doesn't know what he's talking about. These people have no clue what the fuck is going on in the markets. And they're going to lose, right? This happens every cycle. The first cycle that I was investing in crypto, I was that person. I'm like, no, there's never going to be a bear market again. What are you talking about? And I literally didn't know what I was talking about. And the market dropped 90%. And I lost most of what I invested. That's why I started this channel, to learn how the markets work so that I could stay on top of the game and make money in these markets. And that is exactly what we do on this channel. And so that's kind of my big thesis about AI and crypto, right? Let them do what they're going to do. We're going to look for the winners here, right? We already found a lot of winners in the last year in 2025 and 2024. We rode these winners up, including a lot of these Bitcoin mining companies. And then we took profits. We were in MicroStrategy for quite a while. Then we took profits. Then we started betting against the price going higher. This is effectively how to stay on top of the whole market. Now, moving back into crypto, Wyoming has now released the Frontier stablecoin for public purchase. This is the first time any state has released their own stablecoin. Now, the Frontier stablecoin is now available on Kraken, which is a Wyoming-based crypto exchange. Users can purchase it on the Solana blockchain and transfer it to other blockchains using Stargate's platform. Frontier is currently supported on Arbitrum, Avalanche, Base, Ethereum, Optimism, Polygon, and Solana. It's going to be interesting to see what they actually use the coin for, or it's just kind of a test at a local level, but it's interesting stuff. Moving right along to the Zcash controversy. Zcash developers in their entirety have quit, forming a new company after a board clash. Now, I read this the other day, and yeah, there's definitely more to the story here. The entire staff of the Electric Coin Company, the developer behind the privacy-focused blockchain Zcash, resigned following a structural dispute with their parent nonprofit board. The CEO announced that the mass departure on X, citing a governance clash with the majority of the Bootstrap board of directors, which governs Electric Coin Company. So effectively, Bootstrap is a nonprofit to govern ECC, Electric Coin Company, and supports Zcash ecosystem. It's very similar to, I guess you would say, Ethereum Foundation, Solana Foundation. In the statement, the CEO of the Electric Coin Company named these board members as being misaligned with what he described as Zcash's mission. He said the protocol itself remains unaffected, but the personnel changes. He said, quote, yesterday, the entire Electric Coin Company team left after being constructively discharged by the foundation. In short, the terms of the employment were changed in ways that made it impossible for us to perform our duties effectively and with integrity. Whoa. So I don't know really what to take of this, right? Because they're saying basically here that it's misaligned with Zcash's mission. And Zcash's mission is privacy-focused blockchain. And so if the board is misaligning with that to the fact that all of the developers exit and form a new company to create a new coin effectively, or a new blockchain, that's pretty interesting, and it tells me there's probably more to it than just what they're telling us, right? What that is, I don't know, honestly, I don't think it really matters. As I've explained, the general theme for crypto in general, outside of Bitcoin and maybe Ethereum, is that all of these other coins are going to zero. And I mean, effectively, that's what we've seen. We saw this huge run up, right, towards the end of 2025 in Zcash, going from $50 all the way up to about $700 from September into November. As I've explained over and over on this channel, sometimes when you see the price going up, you think that it's actually bullish, that people are buying. But the way that the market operates in certain times is that during selling, the price actually goes higher. And during buying, the price goes lower. This is why sometimes if you purchase, especially in low liquidity ecosystems like outside of Bitcoin and Ethereum, although it used to happen in Bitcoin and Ethereum quite often, where if you put a buy order in, within the next 24 to 48 hours, after it executes your buy order, the price goes down and you're like, wait, what? How did that just happen? Or when you sell, then the price goes much higher. And it does opposite. And so seeing the price going up like this tells me that there was probably a lot of selling going on, right? Because when there is selling going on, obviously somebody's buying as well. And so when you see a lot of buying and selling, regardless of which way it is, the market and the algorithms behind a lot of these market makers and a lot of the bot traders, they don't know how to read it. So they see a lot of activity, and then things that all the algorithms have to adjust, and then the price can really go much higher. This is very potentially what we were seeing here with the price going up from $50 to $700, right? Over 10x. Because this conversation between the Zcash team and the board of directors, I don't think just started last week. I mean, this has probably they've been probably arguing about this for at least 6 months or so. This is also indicator of potentially more downturn in the market. And you know, I really don't know. I don't have really any opinion on Zcash as a whole, right? I just do believe that most altcoins are going to and trending towards zero over the longer term. Most of the legacy coins have not achieved what they said they were going to achieve. Most of the newer coins were just liquidity extraction from the market for big whales and influencers and investors. There's no actual development going on. There's no actual usage and integration going on. I mean, it's just not happening. I mean, really, where we're seeing the innovation going on is in the stablecoin sector, and mostly in Bitcoin and some Ethereum and maybe a few other coins here and there. But it's almost nothing. And so I just think that, generally speaking, especially when it comes to privacy coins, there's a lot of issues there. I think from a regulatory standpoint and from a developer standpoint, that they're not going to be around, right? They're really not. If you don't want to use a public ledger, they're going to say use a bank's blockchain, because that's going to be as private as you're going to get. So very interesting stuff here. I mean, we can see that the price has come down from about $530 at the beginning of January, and now it's down to, I mean, it went under 400 at one point. So that's about a 25% reduction just based on this news. And I don't think that it's a buy yet. I don't know if it's ever going to be a buy, but definitely not a buy after that huge run up. And again, this chart looks very similar to Cypher mining on the 1 year. I mean, quite literally. Let's see if we can even pull up Zcash here. I don't think that it's going to be here. Yeah, no. ZEC USD. No, it's not. But yeah, I mean, you could see this chart. This is the 1 year chart, and then we flip to Zcash. Basically the same chart. So everything is trending down, in my view. And that brings us to the Buck token. Now, I briefly touched on this in a few videos before, because this whole new Buck token popped up. And basically, a Buck token is created by Buck Labs, which is basically buying MicroStrategy's stretch preferred dividend yielding stock or equity or whatever you want to call it. And they're going to give you 7%. And now, I said in that video, I didn't know if Buck token was actually part of MicroStrategy, like if Michael Saylor endorsed this or knew about it. But apparently, the answer is yes. Predator said you have to hand it to the MicroStrategy True North crew. This is a podcast. They've damn near grifted and fleeced the Bitcoin community harder than the Trump family did this cycle, basically showing that the Buck token company or organization announced that Hillary Dan of True North, also a big MicroStrategy bull, they announced him as head of the treasury at Buck Labs, a founding member of MicroStrategy's True North. Dan established himself as a leading voice in MicroStrategy options trading prior to the launch of the preferred equities. He was among the first to provide valuation framework for Strategy's preferred equities following the January 2025 issuance of its 8% perpetual strike preferred stock. Dan also founded Bitcoin Preferred, the first online community dedicated to the Strategy's preferred equities. In his role, he's going to provide efficient and responsible management advice to the Buck issuer's treasury assets, including Strategy's preferred stock. So, yeah, apparently it is there. But this is a warning in my view, right? Because now they're tokenizing a preferred share to give 7% instead of just buying the preferred share yourself and getting 11%. Because if you go to strategy.com, you will actually see that if you click on, I think they just said stretch or strike. I think it's stretch, what Buck is using. It's 11% yield. So you buy it at $100, you're getting 11% yield. And they're giving you, for buying their product, 7%. So they're taking a 4% basically arbitrage on that trade. It's the same thing that MicroStrategy is doing. They're selling you MicroStrategy shares instead of you just buying Bitcoin yourself, which doesn't really make that much sense. And then we have this. Jim Chano said facepalm to this tweet from this guy, Ben, who said he's launching a new Bitcoin fund with Dot Kruger, who's another Bitcoin maximalist, Fred Kruger. Here's how it works. Accredited investors put in a minimum of $100,000. This funds Bitcoin buys, and then they hold within the fund. So you guys following so far? Accredited investors put in a minimum of $100,000. The fund buys Bitcoin, and the fund holds the Bitcoin. Then the fund is going to use Bitcoin as collateral to borrow stable coins. Think about that, okay? Every month, they're going to target sending investors around 1% of their capital as a distribution. These distributions are return of capital, tax deferred until you exit the trade. So these are tax-free dividends effectively until you sell your trade. Meanwhile, you keep 100% exposure to Bitcoin's upside because you still hold a share in the fund. Over the years, friends and family have asked, he says, why can't I just give you my money and you buy Bitcoin? Well, now you can. He said, we don't trade, we don't time the market, we buy and hold, simple. So who is this for? You have Bitcoin and want income without selling. You want Bitcoin exposure with professional custody, and you want tax-efficient distributions. Now, here's the deal, guys. This is very risky, especially where we're at in the cycle, because this is the part of the cycle that I keep reminding my viewers. When Celsius and Voyager were telling the market, oh no, we're totally fine. Like, we're not trading customer funds. Are you serious? We are not trading customer funds. And within months, they collapsed. Terra Luna. Oh, Terra Luna is totally secure. We're going to create a stable coin that's backed by Terra Luna. And because Terra Luna is secure, the stable coin is going to be secure as well. What happened to that? Collapse. Both the stable coin and Terra Luna. And then the other companies that were involved in the funding of these mechanisms and doing basically the same thing and trading with customer funds, they all collapsed because the market kept trending down. Now, I'm not saying that this can't work in a bull market, because there's products that work in a bull market and don't work in a bear market, or that work in a bear market that don't work in a bull market. But this is very, very risky. What they're doing is they're buying Bitcoin with your money instead of you buying Bitcoin. They're going to borrow money on that Bitcoin. So if they're borrowing money on the Bitcoin, granted, they're only going to give 1% back a month, so that's 12% a year effectively. Compounding, it's about 15% a year, I would say. And so you're talking about 12 to 15% a year, meaning they have to borrow against the Bitcoin at least 12 to 15% in a downtrending market by borrowing and still paying interest on this loan, right? So it's going to be maybe 20, 25% of the total fund is going to be used to borrow and collateralize. But if the price of Bitcoin continues to go down after this fund is started and created and the borrowing has begun, how quick until they get margin called? And again, this is where I say, like, I don't know where Bitcoin price is going. I know it's trending lower. I don't know how low, right? Every time I look at all of these aspects of what's going on with the hype, similar to the AI hype, where they're making spoons AI, right? It's like, who the asked for that? It just tells me that there's too much going on by too many, and that most of these are going to collapse. The same way that I think that most altcoins are never going to recover to their all-time record highs ever again. And it's not because I want to be bearish. Of course, guys, I want to. This channel is called the Cryptoviser Channel, right? Not advisor, visor, like you wear on your head, right? And I think that I would love to trade crypto. I mean, that's literally, we were seeing moves and gains and potential that we haven't seen in any other aspect of the market for many years. But I don't see how it's going to work, right? I don't see how the price can keep going up when everybody's squeezing the Bitcoin lemon as hard as they fucking can. Everybody's trying to squeeze a little bit out, right? This buck token, they're trying to squeeze like 4% of dividends out, right? This new fund is trying to just squeeze 1% a month, 1% a month, right? But again, if you squeeze a lemon, after a while, the lemon runs out of the juice. And if you have no more lemons to squeeze, well, you're not making lemonade. You're just going to be making water, right? And so that's kind of where I see what's going on here. And the more I see this squeezing, where we went from, we're going to make hundreds of percentage points on, buying MicroStrategy, on buying the Bitcoin mining companies, on buying AI companies, on buying other crypto companies, Now we're talking about, let's get you 1% a month. And you're going to be happy with that. And that tells me that clearly the bigger gains are gone and they know it, right? Because it wouldn't make sense to buy this versus buying Bitcoin, especially if the Bitcoin price is going down, whatever. So I think there's a lot of risk here. And I don't think that a lot of people in the market are seeing the risk. I mean, he even wrote, this guy who's starting the fund, somebody asked a question. He said, we're not lending Bitcoin. We're using the Bitcoin as collateral to borrow for the stable coins. The borrowing is just to pay the distributions, so it will be minimal. So effectively, they're borrowing money. They're borrowing on your own money to pay you back your own money. And the money that you gave as collateral, you may not get that back at all if everything goes kaput. Another reply to a question, he said, we're just holding Bitcoin produces better gains, of course, but you do not get monthly fixed income. This fund is both of these until it's not, right? Because if they get liquidated because they can't pay back the loan because the Bitcoin price doesn't go higher. Guys, in my view, Bitcoin is not recovering to $100,000 at least until 2027, at least. And probably late 27 into 2028, because we don't hit the next halving until 2028. And you can see here that in the previous cycles, we didn't really hit the all-time highs until basically the next halving. And so that's put us at end of 2027 into 2028, almost 2 years from when I'm recording this video. And they're like, oh no, don't worry, the price is going to keep going up. It's like, they're not going straight up. And so that's why I think we're in the anxiety and denial phase of the psychology of market charts. I think in AI, we're still in complacency. But in crypto and these crypto products, we're in anxiety and denial. And we have a long way down until we're at the bottom of the market. Because the bottom is not just capitulation. Capitulation is a multi-month, I would say, trend where people are like, yeah, I'm done with crypto. This is crazy. We're never getting our money back. And then we will be at the bottom of the market. And so this could take a year, maybe even more than a year. And then to recover to the prices that we're at could take another year or more. See you guys on the next video. As always, don't forget to give the video a free thumbs up. Let me know your thoughts down below in the comments of the video. And I'll see you on the next video. Thanks for watching.